Hi there, Benson Financial Group family. We wanted to bring some planning strategies to your attention related to last year's tax reform that was passed, specifically Trump accounts or Section 530A accounts. These accounts are about to be live in January of 2026. For some, that's a long-awaited arrival, as many with young children have been waiting to take advantage of these tax-deferred pseudo-retirement type accounts for minor children. So just a couple things that we wanted to pass along. If you are looking forward to opening an account, you may have already filled out some paperwork when you submitted your taxes for 2025, or you may have gone online and submitted tax form 4547. It's not too late if you haven't done that. We just want you to make sure that you're taking the proper steps and aware of certain things that are rolling out here soon. If you haven't done so, go ahead, check out the mobile app or the site online. You should be, if you've already filled out documentation, getting communication from BNY or Robinhood, as those will be the two platforms that all accounts roll out on. From there, over time, there may be other platforms like LPL Financial sometime in the future potentially that allow you to roll over a 530A account on one of the original platforms to a new account somewhere else. When those accounts are rolled over, you will not be able to have two accounts open at the same time per child or per individual. These individuals who open accounts must be under the age of 18 years old. Those who were born between January 1st of 2025 and 2028 actually will be able to have seed money from the federal government or the Department of Treasury. $1,000 will be added to their accounts. There may be other nonprofit organizations who your individual is able to qualify for some grant money that will be ranging in who and how much. But just know if that's something that's available to your child or grandchild, just make sure that whoever the custodian of the account is aware of that to make sure that they qualify for any money that they're deservingly qualifying for. As you approach those things, just make sure that you try to track where funding comes from. It could be a little bit messy over time, taxation for distributions in the future. There will be some planning strategies that financial advisors try to take advantage of when the appropriate time comes, but just know some of these contributions to accounts will be after tax, some will be pre-tax, and then growth will grow tax deferred into the future. So your basis will become an important question someday when distributions take place. In essence, these accounts were designed to allow young individuals to learn how to invest and save for long-term important life purchases or needs. And those could include specifically retirement, but maybe some other things that exceptions are available to along the way. In general, though, just know before the age of 18 or the year that a child turns 18, there will be no distributions allowed in a Section 530A account, also known as Trump accounts. That will just strictly be an accumulation phase with no exceptions. Then, once an individual turns 18, there could be the possibility for some exceptions. Think very similar to IRA distribution guidelines for early distributions pre-59.5. But mainly these accounts are meant to provide opportunities to grow an investment over time, whether it's seed money from the government or nonprofits, or it could be family members, friends, or even the account owner contributing to these accounts. Once an individual turns 18, they'll be able to keep these funds in a Trump account or roll them over to an IRA. That will be of their choosing at that time. Either is perfectly fine. There may be opportunities as well for rollovers to ABLE accounts for children with disabilities. If that's something that's specific to your planning case, we just encourage you to speak with your advisor, speak with your tax planning professional, and any of these times where accounts move funds from one account to another, just make sure that you're doing it correctly and just do the proper due diligence and speak with the proper professionals beforehand. So in general, some major takeaways, just know there are annual contribution limits, generally $5,000 per year. Some employers may choose to contribute to accounts on their employees' behalf, there are limits there as well, and these limits do matter, and they do play together. So you'll need to be aware of proper funding limits if you choose to contribute, and especially if you have received funding from someone other than a family member or individual that's close to the account owner or even the account owner themselves. These are considered future gifts, so just know that these gifts may require some tax documentation along the way if you choose to gift someone money directly to their Section 530A account. That is a little different maybe than from a 529 account where annual exceptions apply. In general, we think that there are good planning purposes. Obviously, if there's the opportunity to have seed money to save for a young individual in the future, fantastic. If employer benefits allow you to receive money for a child of yours, great. If you're a wealthy family and you're concerned about estate taxes and you're looking to find opportunities and avenues to move funds from your estate and ownership to someone else's, this may be one of many tools that allows you to do so. If it's just helping a young individual who doesn't have earned income yet and you want them to save into a tax-deferred vehicle, this could be a great opportunity too. It's not necessarily the silver bullet in someone's long-term planning for a young individual, but it is an option to be considered with your financial professional or professionals that you meet with and discuss these things. So just know in general, these are some general terms. We've also published some clarification in our recent newsletters. Give us a call. Obviously, we'd be happy to see if using a Section 530A account fits your planning needs. We're here to help. Hopefully this is some information that gives you some direction or guidance, and then you can go and from here gather more information about whether or not this is an appropriate venue or avenue for you to pass or share funds with a young individual who's interested in growing dollars and investing them for long-term planning purposes for their future.